Welcome to this look ahead to the week starting Monday the 18th. Let's take a quick look through the diary and first of all to the economic headlines. And we start off on Monday with no US trade because it is a day off. A long weekend. We've got Martin Luther King Day on Monday, so no trade in the US markets, but we do have some economic data to follow. By the time the European markets get underway, we'll have industrial production figures from Japan, and then we have the Rightmove House Price Index. Tuesday, US kicks in and we get some data out, not in the US, but out of China early on. Fourth quarter GDP, a much watched number. We'll get some details on that. Also industrial production and retail sales, some German inflation data and the ZEW Economic Sentiment Index. And a little bit later on in the morning, we get UK inflation and then Eurozone inflation out as well on Tuesday. Look at Wednesday's list of economic data points to watch. The World Economic Outlook meets the IMF. UK employment, we get jobs data out at 9:30. US inflation at 1:30. And probably the big one of the day, the Bank of Canada interest rate decision. There seems to be a growing expectation that the Bank of Canada may do something that would be cutting interest rates because of the effects of the low price of oil. EIA oil inventories as well on Wednesday. Let's look at Thursday's snapshot of some of the points to watch out for. The Aussie Westpac consumer confidence data and also inflation in Australia, consumer confidence in the Eurozone, but of course the big one of the day, doubtless the ECB interest rate decision. Not that they'll move, maybe do something, but it'll be interesting to see what happens in the press conference and the commentary afterwards. US initial jobless claims, the weekly jobless numbers, and the US Philly Fed manufacturing index. And rounding off the week, we have the German and UK Eurozone PMIs. It's a mix of some of the manufacturing and service data, UK retail sales, and the Chicago Fed National Activity Index as well. Also Canadian inflation. Chris Beecham is with us with some analysis of some of the currencies to watch next week. I said that we've got the Bank of Japan, beg your pardon, Bank of Canada meeting. This has been an interesting trade. If you've been short the Canadian dollar, you'd have made a ton of money.
You would have done, yes. It's been a spectacular move. It's one of those moves where it's been a straight line with the odd dip, and you can see there the US dollar against the Canadian dollar. We can see on that chart that you were pointing out it's the lowest level for the Canadian dollar, highest level for the US dollar against the Canadian dollar since 2003. And of course, this is broadly all oil driven, and currently the market doesn't expect the Bank of Canada to cut interest rates from their current level of 0.5%, but there's always a possibility that they may react to this move in oil and cut rates to try and boost the Canadian economy, because we will be seeing suffering from the impact of this move. Nonetheless, if you get a fairly in-line statement, you might see some of this sharp rally in dollar CAD just given back a little bit. We're already seeing it pulling back on this Friday. If we zoom into the hourly chart, you can see that we're just dropping back from that 145 level. Again, these round numbers always coming into play, but you wouldn't want to argue with that downtrend just yet. And I think if you get a move back towards even as far as 143, would still probably put you within, I think, the uptrend. So you can see we've got quite a bit of room underneath it, and we've moved into overbought levels on the hourly chart. You can see on the RSI there. And I think to go back to a theme of this week, if you like, with these big moves we've seen in FX, if you like, in cable, in dollar CAD, it's don't chase these moves, let them come back to you, because it's highly likely this trend will continue. I would think it's best not to argue with this, but it's clearly elevated levels, and the RSI is telling you that. So best to wait for it to just pull back on that hourly chart and move back towards the trend line, and then it starts to move higher again.
Yeah, what about these inflation figures out next week? Of course, we've got Canadian inflation as well as everyone else, but we've got UK, Eurozone, US.
Yes, and you feel for Mark Carney, I think, next week, because he and the Bank of England have been saying, look, we expect oil prices and the downward impact from 2015 to drop out of these calculations as we head into 2016 and later into the year. And of course, they're not going to. In fact, they remain firmly within the calculations, within the impact. And that's why you've seen the absence of headline inflation across the board here in the Eurozone, in the US as well. And that makes life, as we've said before, very difficult for central bankers. If we look at this particular currency pair, cable, again, almost a straight line move since the beginning of the year, the odd pause for breath, and you get a little bit of a bounce certainly today off the lows. The Bank of England yesterday, the interest rate decision, the statement fairly negative, I think, on the outlook for the UK economy, certainly downgrading some estimates. So you might get a bounce back here in the short term because we're oversold in cable now for the first time since September. And crucially, that downward trend, that downward channel you've highlighted on that chart quite nicely, we're now outside that. So it wouldn't be surprising to see a head back maybe in the beginning of next week towards the bottom end of that channel rather, even back towards 144 before we see the next move lower.
Yeah, okay, that's cable. Let's take a look at euro dollar. We've got the ECB meeting next week. We've spoken so much about the fact that sterling is such an unloved currency. We haven't really looked too much at what's happening for euro dollar.
No, and it's been bouncing around in this sort of price range in January so far, down towards 107 and then back up towards the December highs around 110. Against the US dollar. Now, the recent set of minutes in the ECB revealed that the decision not to move on stimulus in December, which, as you'll remember, was quite the shock, I think, given the mood music Mario Draghi employed beforehand. It was quite the shock to see no change in stimulus. So maybe we will get a little bit more hint of that in the next meeting. And if it's a sense that maybe the doves, if you like, are getting the upper hand once again in trying to boost the Eurozone economy through fresh QE, you might see some of this Eurozone move, this Euro-USD move, given back. So I think if we do drop back below 109 over the course of Monday or Tuesday, that might sort of signal that we expect further weakness and a fairly dovish statement on the Eurozone economy from Mario Draghi.
Yeah, okay, all right, let's take a look at some of the economic points to watch out for next week. Let's quickly run through some of the corporate news headlines to watch for. And as I said, because it's a day off in the States for Martin Luther King Day, nothing corporate-wise from the US. We do have Rio Tinto out with an early report. It's one of these stocks that continues to pay a dividend, but it'll be interesting to see what the company's got to say about the massive drop that we've seen in these commodities that Rio Tinto is deep into. Ibstock, brick company, also out with numbers on Monday. Tuesday, we've got a number of companies on the list there. We've got Unilever, British Land, Cairn Energy as well will be an interesting one, Bank of America, IBM, Netflix as well after the close of trade, and the continuation of the banking reporting season continues with Morgan Stanley. On Wednesday, we have BHP Billiton on a continuation of the commodities theme, as indeed Hochschild Mining as well. Another one. Pets at Home, JD Wetherspoon, WH Smith as well out with numbers. We've had a number of these retailers out with figures and an indication as to how good or bad Christmas has been. It'll be interesting to see what WH Smith says there. BG Group, and assuming the deal with Shell goes through, we're getting to the end of the reporting of BG as a single standalone company. Diploma, Fresnillo, Goldman Sachs as well, a continuation again of that US banking season, and the chipmaker ASML as well out with numbers on Wednesday. Thursday, snapshot of the list of those companies there. Premier Foods out with numbers, moneysupermarkets.com. Land Securities, American Express as well, and among the bigger ones, BNY Mellon, another US bank. Starbucks, Verizon, Royal Mail as well, a big retail stock still. SAB Miller, one of the last reports there before that company gets swallowed up by InBev and Halfords. And Friday, Computer Center Workspace, SAP, the German software house, General Electric and Schlumberger. Chris, what's your pick here?
Well, I think we should continue to focus on US banks. We've got Goldman Sachs, of course, the paragon of the sector, if you like. And we've had that kicking off this week with JP Morgan, Citigroup and Wells Fargo all stepping up. Now, I think with the slowly rising interest rate environment in the US, you could make a case for saying that actually banks look a bit overdone on the downside, really. They have certainly been hammered over the last month or so, along with the broader market. But certainly we've seen an environment where interest rate rises will make life easier for them, certainly in the net interest margins. Also, they've had little exposure, if you like, to bad loans in the oil sector for the US compared to some of their sort of smaller regional peers. They've stayed away from this. So you might get a bit of uplift in that area, certainly seeing a reduction in loan impairments. Obviously, JP Morgan ruthlessly cutting costs, helping it to beat earnings. It'd be unlikely if Goldman Sachs follows suit. But overall, while their trading divisions remain weak, I think we continue to see US banks poised to benefit well from, I think, the improvement in the US economy.
It's interesting, actually, next week, looking at Unilever, I wanted to pull this one out particularly because it's a defensive stock, and we've seen the markets empty out here. But there are some winners sometimes when there is a big pullback in the markets. These defensive stocks, like drug makers especially, and the likes of Unilever as well, because, for after all, we all need food, for example.
Yeah, and I think Unilever, it's not the most exciting stock in the world. There's certainly thus far in sort of September to now, over the last 4 months, we've seen the stock pull off the lows and come off the 200-day moving average and indeed the 200 weekly moving average, but nonetheless it's still under pressure, if you like. That said, of course, with consumer spending is still strong across Europe, the UK and the US, it might be an environment where we continue to see improvement. So we're watching Unilever to see how these brands fare and whether they continue to see strong increases in consumer spending.
One US stock we've got to pull out is Netflix. It reports after the bell on Tuesday. Big year for Netflix last year, 2015. Be interesting to see what their forecast is for this year.
It could do no wrong in 2015 if you like the stock. One of the ones really powering US markets forward, of course, we talk about the fangs of 2015, Facebook, Apple, Netflix and Google doing so well. Not so great in 2016 thus far, it has to be said. And of course, Netflix is your growth stock par excellence, I think, and you've seen it sort of weakening over the last week or so. Oddly enough, it started the year very, very well with sort of a jump as everyone else sold off. And yet since then, we've seen it. You can see on that chart there, that trend line you've highlighted, that rising blue line. We're testing that now, I think, and that's the worry that we'll see this continue to come off quite significantly. So they need a bit of a decent surprise, I think, to sort of revive sentiment in Netflix. It's unwise to bet against the trend just yet, and you can see that we've got a support coming in below $100 a share. But at the moment, certainly, it might be a buying opportunity, but doesn't look as pretty as it did just a couple of weeks ago.
Yeah. OK, Netflix after the close on Tuesday. Chris, thanks so much indeed. That's it for this look ahead to the week starting the 18th of January.